Hello and a warm welcome from my side. My name is Clemens Spilek and I'm the CFO of the Kontron Group. Let me guide you through the Q1 2024 results. Looking at the KPIs for the first quarter 2024, you see that revenues increased by 36% from 262 to 356 million. The gross margin increased from 107 to 147 million, an increase of 37%, and the EBITDA rose by 20% and 32% respectively, taking adjustments for M&A and one-time effects into account from 30 million to 39.2 million. We booked order entries of 371 million versus revenues of 356 million, implying a book-to-bill ratio of 1.04 times. The net result stood pretty much even at 16.3 million or 26 cents a share for the first quarter 2024. The operating cash flow increased more than threefold from 5.2 million to 23.8 million on an adjusted basis. Looking at the development of the Kontron balance sheet from year-end to the end of the first quarter, you see that the total assets increased a lot from 1.4 billion to 1.9 billion. Why is that? Well, that's the impact of the Katek acquisition you see here. The equity increased by 11% to 670 million, while the equity ratio declined from 44% to 35.6% due to the increased amount of debt. That increased from 210 million to 440 million roughly, including around 100 million of debt refinancing of existing debt of Katek, and Kontron also took on a 125 million loan in order to finance the acquisition of the majority stake in Katek. The net cash position of 120 million turned into a net debt position, a small net debt position of around 80 million. And we aim to get back to net cash by 2025. And the working capital has increased from 170 million to 360 million by the end of the first quarter. That was in particular impacted by the increase in inventories from Katek and meant an increase from 230 million to 440 million, basically doubling the number of inventory, which is to be brought down in the coming quarters. We still had 356 million of cash after paying the Katek price at the end of the first quarter. Let me highlight a few additional disclosures for the first quarter 2024. As you are aware, Katek was only consolidated for 1 month. Therefore, the impact of Katek in the Kontron Group financial figures for the first quarter are relatively small. The reported revenues of 356 million were only impacted by around 54 million by Katek. The gross margin of Katek was 35.8%, while the overall gross margin of the Kontron Group after the end of the first quarter stood at 41.3%, which is well above the target Kontron has set itself for 2024, which is 40%. The net result contribution is almost negligible, and the cash and inventory contribution is accordingly. Inventory almost doubled due to the high inventory of Katek at the end of the first quarter, and cash contribution is relatively small at around 30 million out of 356 million. The financing debt stood at 105 million from Katek, which was basically refinanced much at more attractive margins, not at the level of 200 to 300 basis points, but more between 100 to 150 basis points thereafter. The order backlog contribution amounts to 140 million and the design win contribution amounts to 1.3 billion. Looking at the reported EBITDA of 35.4 million, it was adjusted by M&A and one-time effects amounting to 3.8 million, bringing the adjusted EBITDA to 39.2 million. The operating cash flow at the reporting level stood at minus 10.7 million. It had to be adjusted by a year-end turn effect of 18.9 million and reduced factoring, leading to an operating cash flow on an adjusted basis of 23.8 million. The cash generation at Kontron Group has been very strong in Q1 2024, even despite the significant cash outflows due to the Katek acquisition. The liquidity situation amounted to 356 million of cash and cash equivalents at the end of the first quarter. On top of that, we expect another 19 million of receivables from Vinci, the course of the focus transactions, to be paid out around the end of the second quarter. And we have 130 million of available credit lines, and on top 90 million of additional credit lines we took amidst the Katek integration. Liquidity of the Kontron Group amounts to around 600 million, but only to be used cautiously in the course of the Katek integration and in order to strengthening the business. Comparing the cash generation per quarter, you can see that we generated minus 27 million of operating cash flow in the first quarter 2021, but had 95 million of positive operating cash flow at year end. In Q1 2022, we generated minus 60 million of operating cash flow in the first quarter, resulting in positive 44 million of operating cash flow at year end. And in 2023, we generated 5.2 million of operating cash flow in the first quarter and 123 million of positive operating cash flow at year end. This year, we generated 23.8 million of operating cash flow on an adjusted basis in the first quarter. As a rule of thumb, we spend around 50% of our net earnings for dividends and share buybacks. We've proposed dividend of 50 cents a share, translating in 31 million of proposed dividend. That represents another increase compared to 2021 and 2022. Just leave aside the special dividend of €1 a share due to the sale of the IT service business, which was paid out in 23. We had another strong increase in the design win and backlog pipeline despite the difficult economic environment. The design wins increased from 4.1 billion to 5.4 billion, and the backlog increased from 1.7 to 1.8 billion. The design win increase includes the major design wins in the railway sector worth more than 100 million, which we've announced in February, and the GSM-R contract also regarding railways, the Czech Republic, we've announced in March. It does not, though, include the major order for smart wall boxes, which we have announced in May and which will be included in the Q2 figures. Let me reiterate also the guidance for 2024. We assume we'll achieve revenues of around 1.9 billion, a year-on-year growth of 55%. We expect an EBITDA of 190 million, a growth of 51%, and we expect a net income of around 100 million, a year-on-year growth of 33%. If you have any questions, please don't hesitate to reach out to me. I'm available for you at clemens.bilek@kontron.com. I'm looking forward to talking to you soon. Goodbye.
Disclaimer. As described in the legal section on our website, seat11a.com, this publication is for informational purposes only. This means it is not intended to provide you with any investment advice. Any opinion or recommendation expressed by the companies is neither given nor supported by us and should not be considered investment advice from our side. Also, remember that any opinion or recommendation expressed is subject to change without further notice. The content is obtained from sources believed to be reliable, but we do not guarantee its accuracy, completeness, or timeliness. Seat11a.com and its employees disclaim all liability for any loss that may arise in any form from any use of the information in the video, audio, and on our website. We neither express any opinion on the future value of any security or other investment vehicle, nor recommend any investment based on the information provided. Please consider the publications and our website as a platform for companies to present themselves. You need to seek financial advice from an expert regarding the accuracy and appropriateness of the material presented or recommended by the companies in the publication. As we are just considered a publisher, we may hold and trade securities in the presenting company, whether it is a listed or private company. By consuming our content, you agree to these terms and the terms in our legal section on our website.